Dear fellow traders, I hope you had a great trading week. January was one of the best trading months ever in the past 14 months. In the market, we experienced 14% increase in NASDAQ, which made January one of the greatest months ever in the past 15 months. But I think at this point we need to reevaluate our position because this pattern is pretty much the same as the pattern that we had the past three sharp increase in Nasdaq that we had. If you are looking in the past four sharp bullish move that we have in Nasdaq, one was around 16%, 17%, and 14.5%. So we are very close to this one. The shape of this one is very pretty much the same as that one. So if you are looking at these, you can see uh, other than this week that we have four positive week in a row in Nasdaq, we only had this one with five positive row in Nasdaq, which was the last bullish move of the previous bull market. This one was the sharpest one. We had 17% increase in 3 weeks, and this one was around 16% during 4 weeks. So there is one thing in common with all of this, and that was they all followed by a sharp decline and extending lower to lower and lower and lower. If you can see, this is what happened after these moves. So what makes this situation very critical is that there is a difference between this one and the previous one. This one resemble a possible double bottom, which is this one is the first one and this is the second one, and we passed above the neckline, what we call neckline, which makes it more probable to advance further. The only thing that can push this market up depends on the Federal Reserve decision in increasing the rates by 25% or lower. If Fed on February 1st decide to increase the rate 50% or higher, this will also follow by a sharp decline, and we are going to experience a lower low. However, a 25% is what market expect, and the consensus is based on that. This is very likely to happen, but we never know. So a good decision could be realizing gain or bring a stop loss higher, or just keep the freest stocks and take the capital out of the position. So these three can lower your exposure to the high volatility that we have ahead. Be ready for both scenario is the best thing that you can do. So if for any reason Fed decide to increase the rate with 50 points, I'm pretty much sure market will react very negatively. I hope you use this information and make the best decision and manage your position. We still have 2.5 hours to manage the position. And I believe these sharp moves could follow by another decline or sideways. Be careful about it. Make sure that you have managed your position well and you have your stop loss in the system and you are ready for the Fed's decision on February 1st. Thank you so much for listening to me.